It's Monday, August 5th. Welcome to Market Foolery. I'm Chris Hill. Joining me in studio today from MFAM Funds, Bill Barker. Happy Monday.
Thank you.
Not in the market so much. There's a lot of stocks going down in the market today.
Yeah, not unless you're short, in which case it's a very happy Monday.
Right.
So think about the bears. You're like always assuming everybody's a bull.
That's true. That's true. Shout out to the Bears.
Shout out to the Bears taking a victory lap today.
We're having a good day.
Praising China.
We're going to dip into the Fool mailbag. We've got one stock hitting an all-time high. We'll get to that in a second. Let's start with Berkshire-Hathaway because, as they are wont to do, Berkshire-Hathaway puts out their quarterly earnings report very quietly after the market closes on Friday. Second quarter profit for Berkshire-Hathaway was down 11% compared to a year ago. We'll get to their cash in a second. You were saying this right before we started taping. They don't really share a whole lot in the quarterly report. There's no conference call.
No, they're not giving you a whole lot of additional information beyond the numbers. And if you want to spend the time to look through all the numbers, then you can learn something. But they're not going to do the work for you.
Did you do any work? Did you actually look through the numbers? I didn't, but that's not my job.
No, my job was to just show up here and complain about their not doing the job for me.
Then let's talk about the cash.
Okay.
Because the cash, and I think I mentioned this last week, that Alphabet recently surpassed Apple in how much cash on the balance sheet the company has, because for a while Apple was the leader in that regard. Well, it turns out Berkshire-Hathaway has them both beat. Because as of this quarter, Berkshire-Hathaway has $122 billion in cash on the balance sheet. Holy cow. How badly do you think Buffett is dying to spend it?
Good question. Not badly enough to spend it. I mean, in which case he's kind of rooting for days like today, a lot of them, because he has positioned Berkshire to be ready for taking advantage of what he cannot currently find, which is cheap companies or cheap stocks. Preferably cheap companies. He would prefer to be out there buying entire companies, but rather than portions of companies, as he's stated for a long time.
Last week, when Brian Hinman, your colleague at MFAM Funds, was on the show, we talked about Procter & Gamble, which was hitting an all-time high last week. And one of the things we talked about was the pretty fantastic job that Procter & Gamble has done over the past 10 years executing a strategy of shedding a lot of its brands and making the brands that it has more profitable and exercising pricing power in a way that we don't necessarily think of when we think about household brands, when we think about cleaning products and that sort of thing. We don't necessarily think of pricing power. I'm curious, since we're talking about Berkshire-Hathaway, the extent to which you think Buffett regrets the Kraft Heinz acquisition. Because not that Kraft Heinz is in the same business as Procter & Gamble. Procter & Gamble 10 years ago had food products, but they shed those and they decided to just focus on household cleaning, laundry detergent, that sort of thing. And Kraft Heinz, it is a consumer brand business, and it's just not going well at all.
So the question is, how much does he regret it?
Yeah.
11. I think that's
on a scale of 1 to 10, 11, or a scale of 1 to 100?
On a any Spinal Tap scale. No, maybe like a 9. I mean, he's admitted he overpaid for it. He's on the record having said that, and he doesn't want to overpay. And certainly, having publicly and to the very large chunk of money, having taken, Kraft Heinz took a $15 billion write-down, back in February, I guess. And there were a lot better buys out there than what they ended up getting off of that. So I think he would prefer to have, been anywhere else almost.
They've got $122 billion. Can't they afford to overpay just a little for something?
They can afford to, yeah. But that's not his game. I mean, his game is capital allocation, right? His game is using cash wisely and waiting for market opportunities. And, for a while, it looked like Kraft Heinz was a pretty good buy until it wasn't. I think that they bought it in 2013, and it took a little while for the problems there to be revealed and to develop. So, it may be overstating it to say that it is that big a regret, because it wasn't always as obvious that it was such a poor buy.
Last thing before we move on, shares of Berkshire-Hathaway are basically flat for the past year. I don't own shares. For anyone who doesn't own shares and is thinking about kicking the tires, is Berkshire-Hathaway an expensive stock right now?
Berkshire-Hathaway is kind of the stock market now. So yes, it's expensive if you think the market is expensive. It doesn't vary at this point greatly from the broader S&P 500. If I'm looking at how it's done over the last 3 years as a stock, up 12%, market up 13%, up 10 years, 10 and 10. 5 years, 10 years, 12 and 13. It's not varying very much because it is a broadly diversified company, which is now at least more aligned with some of the tech exposure that it didn't have in years past because of its massive purchases of Apple. But, for the most part, I would say look at the S&P 500 and you probably have a pretty good proxy for whether Berkshire is overpriced.
Shares of Tyson Foods up nearly 10% and hitting an all-time high today. Third quarter profits for Tyson came in higher than expected. And for all of the talk.
Let me answer that one more time, one more way, which is Buffett was not, Berkshire was not acquiring its own shares over the last quarter at the same rate that it had been. So, quarter ended June 30th. The stocks went up a lot. Buffett was not buying shares back of the company during that time.
Well, fortunately for him, the annual meeting with the marathon Q&A session is about, 10 months away, 9 months away. So by then, he probably won't be getting questions about why he wasn't buying his own stock.
I mean, they bought back, I think, 400 million maybe of stock in the quarter, which 442 million, which given 120 billion, available, not much of a commitment.
Can we move on to Tyson Foods?
If you insist. I'm just trying to answer your questions. Late, granted.
For all the talk of Beyond Meat, and certainly on this show and on financial television, there's been a lot of conversation about Beyond Meat and Impossible Foods and sort of the rise of plant-based meat substitutes. Tyson Foods shares hitting an all-time high today are a nice reminder that people are still eating meat, and Tyson is selling it. When you look at all the brands they have under their umbrella with Hillshire Farms and Jimmy Dean and Ballpark Franks and a host of others.
They are, although, some of the enthusiasm may be that tied into Tyson having announced its own plant-based line of meat. So they're not ignoring what the opportunities there may be. And in the meantime, people are going to continue globally eating a lot of meat and other proteins, and they have not yet benefited, although they expect to, from the African swine flu virus, which is eliminating huge chunks of China's pork production. And at some point, if trade continues with China from companies in this country, then they'll probably get a little bit of a chunk of that.
Before we started, Damien, you were saying, yes, technically this stock is hitting an all-time high, but it's not necessarily as impressive as that might sound because, they've had I don't want to say a struggling couple of years, but certainly if you've been a shareholder for a few years, you're happy it's back where it once was.
Yeah, I mean, over the long term, this has been a pretty good stock over the last 5-10 years, soundly beating the market, but less over the last 3, as they had stock had gotten a little bit ahead of itself. It's not that fast growing a company. It has benefited a lot from the new tax structure. And this year, it has rebounded from a couple of hiccups last year. So the stock was depressed going into the end of last year. It's up 50% this year, which is pretty nice. And that, if you're just looking at that one slice of time, looks great. But, it's a pretty slow growing item. They're doing a little better, expanding into packaged foods rather than it's really a commodity basis. Tyson as a brand is known, but it doesn't really have any pricing power over the competition. It's the largest in some categories, but I think in chicken, number one, and meat, number two, maybe. Pork, quite a bit lower on the list. But the scale does not really give it any great operating advantages. It's not getting better margins than the competition, and the brand does not really give it better pricing power, and it attracts certain attention for the treatment of animals. Being the largest, it's going to get more of the focus for that. So it's not all to the good.
So I mentioned some of the better-known brands that Tyson has under its umbrella. One of the brands that I didn't mention was Original Philly Cheesesteak Company. Is that a favorite back in your old stomping ground in Philly?
No.
Or I guess more of just like the local places.
Not sure I'd ever heard of it, but. I'm concerned. I'm concerned that it is listed as one of their brands and that the link takes you to the Original Philly Cheesesteak Company page, which states Original Philly, is the real deal. We're the category pioneer and leader, still family owned and operated, now in the second generation. And my question is, what?
You're saying back in Philadelphia, people aren't familiar with...
I'm saying it can't be family owned and operated unless you're talking about the Tyson family owning it and operating it. I mean, maybe it's family operated, but it seems to be owned by Tyson. I'm sure they make a fine frozen cheesesteak. Not that anybody wants to eat frozen cheesesteaks from when you have the opportunity, as one does in Philadelphia, to get them virtually on every street corner.
Yeah,
fresh.
It is pretty great. One of many reasons to go to Philadelphia.
Many.
High on the list, though, is the cheesesteak.
When was your last trip to Philly?
I think a couple of years ago, actually. So time to get back there.
Yeah.
Even if it's just for a day trip to get, a cheesesteak.
Cheesesteak. Catch a couple games.
I don't know about catching a couple of games. I'll catch a couple of cheesesteaks.
Hear the history of the Declaration of Independence?
I'm just there for the food.
You got to go. Have you done that? Have you done the historical?
Oh, yeah.
You didn't waste time with the Liberty Bell, did you? That's like the most overrated thing to see in America.
Yeah, but it doesn't take very long, so it
depends on the line.
Wait a minute, the most overrated thing to see in America? No, I wouldn't think so.
Have you seen it? You've seen the Liberty Bell, right?
I've seen the Liberty Bell, yeah.
Yeah? It's
fine.
Yeah.
It's fine, but it's not super overrated.
Yeah.
This is a good time to mention that our email address is marketfoolery@fool.com. And we love questions about stocks, and we're about to dig into a question about stocks. But also, if you have opinions on what is the most overrated landmark, is that what we're going with? The most overrated landmark? I thought you were going to say in Philadelphia. It's the most overrated thing in Philadelphia. I'd be like, okay.
Historic, iconic American tourist trap.
Okay.
But of the high quality variety, like not, giant ball of string on the side of the road, which to me can never be overrated.
If it's truly giant, yeah.
But like if you go to Philadelphia to see the Liberty Bell, you're wasting your time. It's not that great a story. It's not, you don't see it and get inspired to do what? Right?
There are a lot of other things to see. So maybe put it on your list, but put it way down on your list.
Yeah, if there's a really long line, if the line's going to be half an hour to look at the bell, just go, Google it and look at a picture of it, I say.
Get a cheesesteak. Our email address is marketfoolery@fool.com. Question from Brendan O'Brien in Maryland. Brendan writes, I've done my homework on Altria Group, ticker symbol MO, formerly known as Philip Morris. They have a reasonably healthy balance sheet. They are slowly but surely diversifying into smokeless products and lean on the cash from the core cigarette business until they establish something more sustainable. My question is, what do you think Altria Group will be in 5 to 10 years after moving away from smokable products? Interesting question. And Philip Morris back in the day, it's been Altria Group for, I guess about 20 years or so. And this is one of those stocks that is a little bit of a lightning rod in that there are absolutely funds out there and there are absolutely people out there who say, I don't want to invest in smoking, and so I'm not going to own this stock. And that's anybody's choice. And people are that way on any number of businesses. I will just point out that over time, this has been a market-beating stock and a stock that has I don't think it's just a dividend aristocrat. I think it's whatever is the one above aristocrat.
King, emperor.
Something like that. Yeah. What do you think of Brendan's question? What do you think in 10 years Altria Group looks like from a business standpoint?
So I guess I would hone in on one of the words, which is something more sustainable. And I would say, well, this has been unbelievably sustainable. The addiction that people have to cigarettes, and despite all of the information about the many reasons to never get started, it persists. And so I think that I would start with, well, in 10 years, if you asked me 10 years ago, how well is it going to survive over the next 10? I would have underestimated the staying power of cigarettes, despite all of the local taxes put on them. They're being priced to a point where you would think it wouldn't be sustainable. So I think you have to question, is the death of cigarettes overrated? And if it continues to sort of die a slow, very slow death, then in 10 years it looks a lot like it does now, having increased its dividends every year the way it's been. It'll be a big dividend payer, and it'll have this highly successful cash profitable business, which is not growing, but they just make a lot of money off of it. And maybe they diversify further into smokeless. Maybe that becomes a lightning rod to a similar degree. It's got the potential. You featured some of that on one of your podcasts recently, Jewel.
Oh, yeah. CNBC did an eye-opening primetime documentary about vaping, and the CEO of Juul was one of the people who was interviewed. Carl Quintanilla did the documentary, and it was pretty incredible to see how quickly people become addicted to vaping, and also how there are people who have used vaping to get off of smoking. They've quit cigarette smoking and they're vaping instead. But there are also all of these, particularly younger people who have started vaping. And one of the stunning things to me was this kid who the first time he vaped, he was 14 years old. And Carl asked him, what was it like the first time you did it? And he said it was great. It tasted great, and I was watching that thinking to myself, oh my God, the first time I smoked a cigarette, my lungs were on fire, and I just thought, well, who in the world would ever do this? So the fact that vaping, it's like, oh, this tastes great, and I'm feeling a buzz immediately. It's like, oh, no wonder people are getting addicted immediately to this. And one of the things in the documentary is how we don't have the decades of health evidence for vaping that we do for cigarette smoking. And 10 years from now, to Brendan's question, that's one of the, I feel pretty good about the idea that in 10 years we'll have at least some concrete evidence of what vaping does to people's, not just their lungs, but their bodies in general.
Well, I think you mentioned that Altria was a controversial company. I mean, one of the interesting, I would imagine that if you asked people, quick, name the most evil company in America, Philip Morris would be the leader. More people would come up with that name.
Isn't that why they changed their name to Altria Group?
Right. But the controversy remains. So, I mean, if anybody can think of companies they think would be more popular in terms of getting the answer of most evil company in America. And maybe gun manufacturers, you'd find some people offering that. You're shaking your head.
No. I was just going to say, like, I put this business, I put Altria Group as a stock in the same category as gun manufacturer stocks, casino stocks. There are plenty of people who say, I think gambling has no redeeming value whatsoever, so I don't care what the returns of
These people have never won on the hard eight. Because that's pretty redemptive when you have the hard eight come in and you've
I'll take your word for it. I've never been in that position. But you know what I mean? Where people are like, no, I don't want to invest. I don't care that casino stocks might be a good investment.
Split aces and get 2 10s?
No.
Again.
Never.
Okay. I mean, some people would throw in casinos, but I got to believe Altria, would still be the winner, for that. And so they've got in their research the playbook on how to keep research regarding any, problems with vaping in a confused state in the public mind. I imagine they're willing. I'll just go ahead and accuse them. I imagine they're willing to look at that playbook and see what works in terms of making that harder to regulate in the way that it might ultimately be.
Well, certainly the stories we've seen recently, the emails that have come out of the investigation into opioid manufacturers,
right? Okay,
and sort of the degree to which executives knew, this is something that people are becoming addicted to do in terrifying ways, and in some cases just sort of shrugging their shoulders, saying, "Oh well, as long as we're moving our product."
Yeah, and I think that where you would get the most votes in terms of evil, it would be hard for casinos to keep up with that because their ability to hide the harm that happens to you is not very good. That is, you walk out of the casino, if you've lost your money, completely aware of the harm that has happened to you, unlike opioids and tobacco. Where, when you take opioids, in the short term, you're getting relief from pain.
I think we're going to wrap up here because I don't see where we go from here.
Really?
I mean, unless you want to talk about how the Yankees are on a hot streak and the Red Sox are on the opposite.
All of America's already talking about that. It's hard to go anywhere where people are not talking about just what happened to the Red Sox. I mean, it's just incredibly depressing for people that like the Red Sox.
And what turns that frown upside down is Tom Brady signing a 2-year extension. You can read more from Bill Barker and his colleagues. Go to mfamfunds.com. Thanks for being here.
Thank you.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's going to do it for this edition of Market Foolery. The show's mixed by Dan Boyd. I'm Chris Hill. Thanks for listening. We'll see you tomorrow.